we talked about, that now you can buy if first in certain situations, if you're
Sure.
buying the sort of the needle in the haystack right now.
Yep.
But on the flip side, selling properties, I
Yo.
recently over the last year, I sold off pretty much my entire portfolio, which was in Chicago or in Illinois. It was
Okay.
outside of Chicago.
Nice.
I'm not one of those guys that believes you buy and hold forever. I know some people say you just never sell. And I
Mm-hmm.
feel like there are times to sell. But I think identifying the right time to sell is sort of an art. And so how do you identify which properties you're going to sell
Mm-hmm.
and when that time is?
Well, there's two things. So first off, I agree with you. I am not a buy and hold forever guy, right? If you're near the end of my book, you know that I've called the market twice when to sell. The first one for single family homes, it's really easy. In California, the California Association of Realtors has published for decades something called the Affordability Index, and it's a scale of 1 to 100. And what it says is, again, every state has it, but it's recorded differently. In California, from California Association of Realtors, it says if let's just say it's 40, the number is 40. That means 40% of the average population can afford to buy the average home, right? So again, when you have the beauty of time, is you can look at it over years and decades. And in Fresno specifically, anytime that has got below 20, for me is a yellow flag. And if it ever gets below 15, I sell every single home I ever had, period. It's that simple. Today, and why I'm bullish on Fresno, it's 50, 50. Because affordability is made up of really three factors. One is price. Prices are up. Prices, the last time I checked, the median's like 336 or something. But interest rates, way low, right? And then it's income, and incomes are up. So the fact today, like in January, the affordability was like 47. In a market where prices are up 8%, the fact that affordability is also up just tells you how impactful lower interest rates are. So today, I feel really good about Fresno single family homes. I watch it. It basically means single family homes, let's just call it 330, needs to go about to 480 to 500, assuming interest rates stay the same, before it's unaffordable. And trust me, if Fresno houses get to 450, I will sell every single house I have. Just will. And I'll feel good about it. And I'll just sit on cash like I did last time. And then there's another side of my portfolio, which is apartments. And I sold some apartments in 2019, like November, December, because apartments are traded on something called a cap rate. Right? Fresno is a market where the property is usually around 6.5 to 7.5. They got as low as 5, and a cap rate of low like that means a high price. And in 2019, right, my opinion changes all the time. I saw a recession coming. And again, I know owning C-class apartments in a recession sucks. And oh, by the way, cap rates were low, which means prices were high. So I sold 48 units in 2019, just raising cash. So I'm like you. I sell when people want to overpay, and I'll buy when I see a deal. So that's my thoughts on selling. I think you had
Yeah.
a second part, which I now forget.
Well, I mean, I kind of have a caveat onto that question. So
Sure.
after having gone through several market cycles,
Mm-hmm.
what's your prediction then on how long like I think we all agree that there has to be a correction at some point. Prices can't go up forever. So, so if somebody was to say, okay, it seems like now is the time to sell, I'm going to sit on cash maybe. How long do you think it would take to correct? When do you think people should
Oh,
start jumping back in?
well, we're going to have a fun conversation, because I don't necessarily think today is the time to sell single family homes
Okay.
in most markets. Like if you're
Yeah.
in Chicago, in San Francisco, in New York, sell, because you're about to suck. But there's only 4 things that can cause real estate nationally to crash. There's only 4. So I will run through the 4, and you tell me when you think these will change. One, and the biggest one, is interest rates. If you could tell me when interest rates on a 30-year loan will go from 2.9 to 5.9, I'll tell you when real estate will crash. Because real estate is bought on mortgage payments. And if mortgage rates go from 2.9 to 1.9, which could happen, right? prices are going up, man. And again, everything the Fed says rates are going to be low for a long time. My guess is they're low for 7 to 10 years.
Wow.
Hard for real estate to go down, right? If you tell me that, what is it today, September 11th, 2020, and the average 30-year never gets above 30% for a decade, or above, sorry, woo, that was scary, above 3% for a decade, real estate won't go down. Single family homes won't go down. It just won't, unless prices go up 200%, which, okay. So that's the first one. So if you can tell me when interest rates double, I'll tell you when real estate crashed. That's the first of 4. The second is supply. And this is the one you have a debate on, is will there ever be a wave of supply, right? People talk about baby boomers downsizing. Yeah, I get the argument. You really want to downsize from a 4,000 square foot to 1,100? Some people, but not many. So they're going to die in them. Is the forbearance and foreclosure crisis as bad as people say? I doubt it. I've lived it last time. The banks are treating it entirely differently, so don't see it. But it'll make San Francisco and New York worse, but it won't hurt the country. Are builders going to suddenly get aggressive and build 3, 4, 5x the homes? Not likely. Most of them remember last time. Most of them can't find labor. Most lumber's up 80%. They're just not going to do it. So I don't see supply ballooning across the country. All right, so that's 2. The third is demand. Is there anything in the demand picture that would cause it to be cut in half? I don't think so. Millennials now are delayed purchases. Now they're in their 30s, which is hard to say. We have the most financially aware apartment dwellers, Class A, going, shit, I don't want to live in a shoebox anymore. I want to own something. I want a backyard for my kids. We have technology that's saying, I don't have to live a block from my office. I can actually telecommute and make Zoom and all this stuff work. So I see nothing crushing demand. And then the last one, which again, we'll see when the election happens, is a legislation change in how real estate investing is treated. And the only example we have is back in the S&L crisis when there was legislation about how passive losses could be absorbed against income. So there could be some crazy legislation change that makes real estate investing less interesting. But and again, real estate investing is a really small sliver of the market when you talk about homeowners. And I think there's just as much incentive coming. I think if we have a switch in the executive branch, home ownership goes up, not down. I think Biden will do a $8,000 to $15,000 tax credit for home ownership, which will just make demand go up even more. It makes the supply constraint worse and makes prices go up. So there's only 4 things that can cause a crash. If you can tell me when any of those 4 things will happen, we can agree or disagree. I think real estate nationally is up double digits in the next 18 months, and I am so happy to own a lot of it.